Triple your money with this strategy. When you invest, you not only gain on the initial invested amount, but also on the earnings generated over time. Compound interest reinvests these gains, creating a snowball effect in finance. The longer the money stays invested, the greater the potential for exponential growth. Dividends add an extra layer of growth to stock investments. Apart from the stock appreciation, they represent a portion of profits distributed to investors. Reinvesting these dividends activates the power of compound interest, generating more stocks and dividends, resulting in a continuous growth cycle. Investing is akin to planting financial seeds to harvest a future full of opportunities. It's the skill of turning modest savings into a carpet of prosperity. By shaping your financial future, you build strong foundations to achieve your dreams. When investing, you don't just save money, you make it work actively for you, providing financial gains and enabling goal achievement, financial freedom, and security to face future challenges. Stocks. Here, you become a company's shareholder by purchasing its stocks. The idea is for these stocks to appreciate over time, offering profits when sold. Some companies also pay dividends to shareholders, a kind of bonus for owning their stocks. Bonds. These are like loans you give to governments or companies. In return, you receive regular interest payments, and at maturity, the principal amount is returned. Real estate. Investing in properties like houses, apartments, or land can generate income through rents or property appreciation over time. Mutual funds. These act as diversified packages of investments managed by professionals. They pool money from various investors and invest in different assets like stocks, bonds, or real estate. ETFs, similar to mutual funds, but their shares are traded on the stock exchange. They track specific indices like the S&P 500 and offer diversification at lower costs. Alternative investments. These encompass commodities, foreign currencies, cryptocurrencies, and other less conventional assets. They are riskier, but may yield higher returns. Every investment carries a certain level of risk. The higher the potential return, the greater the risk. It's like a roller coaster. Riskier investments can bring high gains but may also lead to significant losses. I've prepared a complete and free course to help you start investing your money in the stock market. Click on the first link in the comments or access the suggested playlist now.